Hey everyone, welcome to The Explainer. I'm absolutely thrilled to have you here today. Look, if you're the kind of person who loves getting under the hood of a business, breaking down the raw numbers to see what really makes it tick, well, you're in exactly the right place. Today, we're diving into the Q1 FY27 financial results for Tata Trent. We're talking massive revenue numbers, climbing profitability, and a story of margin expansion that honestly just stands out from the pack. Okay, let's dive right into this. So here's our quick roadmap for today. We'll start with top-line revenue growth, then move on to maximizing operational efficiency, check out the bottom-line surge, and finally look at the stock market reaction.
All right, Section 1, top-line revenue growth.
To really wrap our heads around their profitability, we first have to look at the sheer scale of the cash coming in the door. Let's anchor ourselves on this core number right here, 5,755 crore rupees. That is Tata Trent's revenue from operations for the first quarter, ending June 30, 2026. This isn't just a big number for the sake of it. It represents a phenomenal scale of consumer demand flowing through their businesses in just a 3-month window.
Now, when we put this into historical context, we get what I like to call a double beat. Just look at the jump from Q1 of the previous year. That is a massive 17.84% year-over-year increase from 4,883 crore. But it's not just about the annual growth, right? Examine that sequential step up from Q4 FY26. That's a 14.45% quarter-over-quarter increase. They're clearly showing a sustained trajectory here, just building really solid momentum.
And just to round out the entire revenue picture, their total revenue perfectly mirrors this robust operational growth. Standing at 5,785 crore rupees, it climbed 17.47% year-over-year and 14.41% sequentially. The core takeaway here? The top line is expanding rapidly, which sets up the ultimate test for literally any business. How efficiently are they managing all that cash?
Which brings us to Section 2, maximizing operational efficiency.
Now we're shifting gears a bit to see how efficiently Trent is actually operating behind the scenes to support those massive revenue numbers. As you probably know, rapid growth can sometimes really hurt margins, mainly because scaling up physical operations is incredibly expensive. But man, this brilliantly illustrates Trent's operational leverage. EBITDA, excluding other income, landed at 1,129 crore rupees. So while revenue grew around 18%, EBITDA absolutely soared by a massive 33.15% year-over-year and 21.73% quarter-over-quarter. They aren't just selling more stuff, they're operating substantially better while doing it. So the really crucial point here is how that raw efficiency translates to the actual margin percentage. Take a look at the stark contrast here. Back in Q1 FY26, the EBITDA margin was 17.36%. Now, in Q1 FY27, it has expanded to a super impressive 19.62%. That is a solid expansion of 2.26 percentage points year-over-year. And if we look at it sequentially, it's a 1.17 percentage point bump from Q4. What does this tell us? It proves that higher operating efficiency is structurally built right into their recent growth engine. All right, moving on to Section 3, the bottom line surge. This right here is the final payoff of our top-down journey today. This is where we see that fantastic operating leverage turn into sheer, unadulterated profitability. I want to pause just for a second to really anchor this crucial figure, 518 crore rupees. That is the profit after tax, or PAT, for the quarter. When you compare that to the 425 crore they reported a year ago, we're looking at a very healthy 21.98% year-over-year jump. Now, what's really interesting about this is how that double beat narrative continues all the way down to the earnings per share. PAT margin has improved to a clean 9.00%. Profit after tax attributable to owners reached 519 crore, which is up nearly 21% year-over-year and almost 30% sequentially. And because of all that, earnings per share, or EPS, surged to 9 rupees and 73 paise. That's up from 8.06 a year ago. Literally every single profitability metric is pointing sharply up and to the right. Take a look at this matrix. Honestly, feel free to pause the explainer right here if you want to really soak in the full picture. This grid perfectly summarizes Trent's Q1 FY27 narrative. When you read from left to right, top to bottom, you see scale happening in perfect tandem with expanding margins. Look, it is rare to see 14 to 17% top-line growth accompanied by 20 to over 33% bottom line and operating growth. It's just a textbook example of highly efficient execution. Let's look at Section 4, stock market reaction. So we've seen the fundamentals, right? But how did these stellar financials translate to the real world of trading on August 6, 2026? Walking through the stock's timeline, we actually see a pretty fascinating dynamic. Over the trailing one-year period, the stock was down 12%. However, looking year to date, it generated a positive 10% return, showing some serious recovering momentum leading right into these results. And on the actual day of this Q1 announcement, the stock traded 0.54% higher. Sure, it's a modest bump on the day, but it clearly shows the market digesting those structural margin improvements we just walked through. And that brings us to the end of our breakdown today, which leaves us with one core, really provocative question. With margins expanding so robustly and double-digit growth across the board, what exactly is the next ceiling for Tata Trent? They have clearly proven they can scale while driving operating leverage, which, let's face it, is the ultimate goal in their sector. You'll definitely want to keep a close eye on how they sustain this nearly 20% EBITDA margin in the coming quarters. Thank you so much for joining me for this explainer. Keep analyzing those numbers, and I will see you next time.